Alright, good afternoon then everyone, as we are at the beginning of another week of trading. Now I'll have a quick look back to last week just to jog our memories. You can see massive moves across the board. The back end of last week, middle to back end of last week. Started off a bit choppy, but you can see as we got into Wednesday, Fed Day, massive downside across the board on the dollar. You got your Aussie, Kiwi, Euro and Sterling all pushing higher aggressively. Dollar Swiss, dollar CAD, dollar Yen all pushing lower aggressively, which obviously is US dollar weakness. You look towards the S&P, the Dow Jones, the Nasdaq, the Russell, all of them flying higher. The S&P finished nearly 7% higher last week. You also had the DAX, the Euro stocks pushing higher, the FTSE a bit as well, although the FTSE was a little bit left behind once you look at the speed and the aggression across the moves against other assets. You look at yields in the US, yields lower, 2s and 10s both lower. 10 a little bit more aggressive than the 2, but ultimately both still substantial downside across US yields. Now that was driven by the Fed. The Fed came out and said that the dot plot from September was likely to be incorrect now, and I mean we're not going to expect another interest rate hike from the Fed, which kind of says to us that the Fed are done. 96% chance no interest rate hike through to year end, which looking towards the kind of pricing around June to August kind of time. Next year we may begin to see some cuts start to roll in from the Fed, which is obviously implied of a negative economy going forward. Now, although stopping interest rate hikes is positive for stocks, there is, you'd have to imagine there's a pain ahead from stocks into next year. But ultimately, we're not in the business of trying to forecast things a year out in advance. Got to think about what's kind of happening on in the short, into medium term, if you would like. But a year out from now, you can think, we might see a recession, but ultimately we're not thinking about that at the moment. What we're seeing is stocks up 7% in a week because of the Fed stopping hiking interest rates. Now, whether you think that's actually positive for stocks or not is irrelevant, with NFP then coming in and further reaffirming the stance from the Fed that no more hikes are needed. Unemployment ticked up. Jobs growth was weak over the month of October. It's not really a situation that's positive for business conditions, is it? But stopping the hiking of interest rates kind of is. But 5.5% interest rates going forward, I'm not so sure stocks should be having a 7% rally like that. I'd imagine there's a bit of pain ahead, but ultimately that's not what we're thinking of right now. We've got to stay, I think, on the long side of stocks heading into this week. We then jump across the calendar, and you can see across the calendar you got a couple of speeches from Jerome Powell on Wednesday and Thursday, but ultimately you've got no high impact economic data from the US until you get Michigan consumer sentiment, which is something we'll keep an eye on. But is it one of the big hitters of the high impact data? No, it is not. So ultimately, we've got nothing fresh or no fresh drivers to keep that move going. Does Jerome Powell reaffirm a stance, or does he see asset prices move with the aggression that they have? Maybe does he backtrack a little bit? So hopefully not. Hopefully we can keep these moves going. But ultimately, the longer term trend on a lot of these stocks going back a long while is still lower. If we flick this back to a daily chart, you can see across here we got lower highs and lower lows. Across your S&P, across your Dow Jones, your Nasdaq, your Russell. You don't need me to point that out. You can see it for yourself. So yes, we've had a strong aggressive bounce back, but ultimately we're coming up to pretty strong resistance levels across the major stock indexes. You got big resistance ahead of 43.90 on the S&P. You are at big resistance at 34,000 on, or just above 34,000 on the Dow Jones. Slightly higher on the Nasdaq, up at kind of 15,270. Russell, we're kind of at resistance of such on the Russell. So there's a bit of work needed to get through these levels. Wouldn't at all surprise me if you saw a bit of a bounce back. Do you want to go and trade this bounce back, or do you want to go trade a bounce back? Not my preferred method of trading. I prefer to kind of sit and wait for a pullback and then look to go again. So tricky trading conditions to begin the week. Maybe back end of the week we might get some action. But US back to opening at 2:30 this week, so we'll have a look, see what they have to say for themselves once they wake up for business at 2:30. But that is the US. We've also got the RBA, and I think the RBA is an interesting one. We're due to see Michelle Bullock increase interest rates again. 4 straight meetings. That covers Governor Lowe and also the new governor, Michelle Bullock. 1 from Bullock, 3 from Lowe, of no interest rate hikes, flat interest rates for 4 RBA decisions in a row. We are now seeing inflation remains sticky. They say their tolerance for their tolerance for a slow decline in inflation is low, and that's what we're seeing come in tonight's overnight session, tomorrow morning, whichever way you want to try and put it. RBA likely to hike interest rates again due to inflation not coming down at the speed that they would like it. So 4 meetings in a row, they were making progress. That progress has slowed, and now they are looking at hiking rates again, which you have to imagine will be a positive for the Australian dollar if they do follow through. That you got the Fed saying they're done, you got the Bank of England last week saying that they're done, although higher for longer, so a bit of positive sentiment remains for sterling, but ultimately they are done. The ECB done, rest of the currencies, the Bank of Canada or BNZ all likely done, Swiss National Bank done, the Bank of Japan, they're probably closer to moving towards hawkish than they are going any more dovish, which is obviously to be expected from them. Ultimately they've still got negative interest rates, so the RBA likely to be the only ones to continue hiking. What do they say alongside that? Do they hike again, and do they say we are going to hike again in the future? Still have work to do in terms of inflation, so maybe it's not great for the Australian economy, but for the Australian dollar, you'd have to imagine higher interest rates would make sense buying the Australian dollar if they do follow through with it over the course of this week. Apart from that, Chinese inflation on Thursday. Chinese inflation higher than anticipated, Prince. You got $1. We have a quick look, and we'll just grab any one of these charts. You got $1 at a big support level, on a big higher time frame support level. We just get this across to the daily. You can see across here, big support level across that. We got these highs and obviously all these lows in through here. Something to keep an eye on. It's a bit of a shot to nothing, really, that inflation print coming out higher than anticipated. It's not something that happens regularly, but if that does squeeze a bit higher, it looks a good trade through that support level. Bit of weakness, ongoing weakness in the US dollar. Daily fixings from the PBOC have been strong in recent weeks. Try to prop up the price of the currency. That might be a little trade worth taking if you can get involved in that. Well, the economic data does not provide us with much clear-cut information over the course of this week. GDP from the UK. Some market participants think they've already entered a recession. Quarter over quarter, minus 0.1 consensus. We're expecting negative growth in Q3 from the UK. That's one step closer to a technical recession within the UK. But certainly economic data not positive out of the UK. Really, it's only positive out of the US, apart from inflation figures globally not coming down as fast as people would like. But that's sort of where we're at today. You'd have to imagine you sell the dollar again, you buy stocks again, buy bonds, which is obviously yields lower. Is now the best day to do it? Probably not. Is tomorrow the best day to do it? Maybe not. You might see a pullback for a couple of days. Certainly, if I was looking to reload positions in the direction of last week's moves, I would need a pullback in order to re-engage to the downside on the US dollar and the upside on stocks. So we'll keep an eye on that. See if the RBA presents us with any opportunities overnight. That's really all we've got to go off over the course of this week. So best of luck out there. Maybe keep your money in your pocket if things are a bit choppy. No need to go and blow a few percent at the start of the week. Things could come to us come the end of the week.